If you're thinking about getting an FHA loan, stop. This one decision could cost you thousands of dollars, trap you in financial regret, and make buying your property way harder than it should be. Everyone says FHA loans are the best option for first-time buyers, but what if I told you that's not the full story? I got an FHA loan about 2 decades ago, but since then, a lot has changed. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to break down the real truth about FHA loans. On the surface, they look great: low down payment, easier qualifications, and more flexibility. But these so-called benefits come with serious drawbacks that could cost you thousands before you even realize it. And here's the kicker: even if you think you know everything about FHA loans, there's one shocking downside I'll reveal at the very end that most people never realize until it's too late. So have you ever considered getting an FHA loan, or maybe you already have one? Let me know in the comments. I'd love to hear your experience. So stick with me because this will change the way you think about buying a home forever. So number one is mortgage insurance. This is the hidden cost that never goes away. Now, FHA loans look affordable at first, but the reality is they trap you into a lifetime of extra costs, all because you're putting down such a small amount. Now, here's what they don't tell you. FHA loans require both an upfront and an annual mortgage insurance premium called MIP, and neither of them benefit to you. The upfront MIP is 1.75% of your loan amount on a $300,000 loan. That's over $5,200 added to your mortgage immediately. The annual MIP can be as high as 0.85%, meaning you're paying over $200 per month on a $300,000 loan. Years ago, FHA mortgage insurance would automatically drop off once you reached 78% loan to value. And I remember calling my lender asking when my mortgage insurance would disappear, and they gave me an exact date. Now, it was motivating. I wanted to pay down my mortgage as fast as possible just to remove this extra cost, but not anymore. Now, FHA mortgage insurance stays for the lifetime of the loan. The only way to remove it, you can sell the home or refinance into a conventional loan, which comes with its own costs and fees. And what happens if the interest rates go up during this time? Well, refinancing might not even make sense, and now you're stuck. So what do you think? Should mortgage insurance be required for the life of the loan, or should it drop off at a certain point? Drop your comments below, but this is just the beginning. The next issue could stop you from even buying the home you want in the first place. So number two is strict property requirements. Now, the FHA controls what you can buy. So if you think FHA loans let you buy any home you want, think again. FHA loans have some of the strictest property requirements of any loan. If a home doesn't meet their safety and livability standards, your loan won't be approved. And that means if a home has some roofing issues or outdated plumbing or missing appliances, even peeling paint, your FHA loan could get denied. And this is really what first-time buyers are kind of looking for, because this is where the value can be added to the property. Now, one of my students was looking at an investment property as a house hack. Great location, solid numbers. It was a perfect long-term wealth-building property. However, because the home had peeling paint and a missing handrail, their FHA loan was rejected. The seller didn't want to deal with the hassle of making repairs to get his loan approved. My student didn't want to make repairs to a property, invest money that he was not even sure he was going to be able to purchase. So he moved on. And that's why FHA loans are not investor friendly. And if you're thinking of using FHA loan to buy a property and improve it over time, you might not even get the chance to. Now, have you ever seen a home loan get denied because of minor issues? Let me know in the comments. But let's say you actually find the perfect home, there's still a massive problem. Sellers don't want to deal with FHA loans either. So number three is they're less attractive to sellers, and you might lose your dream home. So most first-time home buyers don't realize, but FHA loans can actually hurt your chances of getting your offer accepted. Why? Because sellers don't want to deal with FHA loans. If you're in a multiple offer situation and you're competing against cash buyers or conventional loan borrowers, your FHA loan is immediately less attractive. Sellers prefer those cash buyers. It's fast, guaranteed closing. There's no loan contingencies because there's no loan, and conventional loans where there's fewer requirements, there's faster approval. FHA loans, though, have more restrictions, more delays, and more uncertainty. And I've personally seen buyers offer full price on a home and still lose the deal just because they were using an FHA loan. Sellers would rather take a lower offer from a conventional buyer than risk the deal falling through because of FHA's extra inspections and requirements. So what do you think? Should sellers be allowed to reject offers just because they're using FHA loans, or should all offers be treated equally? Let me know in the comments. Number four are the loan limits. Now, FHA might not even cover the home you want. So FHA loans come with strict loan limits, and this could completely ruin your buying power, especially in high-cost areas. Now, depending on where you live, FHA loan limits range from $500,000 to $1.1 million. That might sound like plenty, but if you're buying in a competitive market, that might not be enough. So let's say you're looking at a home priced at $700,000, but the FHA loan limit in your area is $600,000. That means you have to come up with the $100,000 difference yourself. At that point, why even get an FHA loan? The primary purpose of an FHA is to lower your upfront costs. However, in reality, the limits may require you to put even more money down. So have you checked the FHA loan limits in your area? They might just surprise you. So what is the alternative? Well, FHA loans can seem like a good option for first-time homebuyers, but before you commit, make sure you research other loan options. For example, I have an account with a local credit union here in Florida that offers conventional loans with as little as 5% down and only 0.25% origination fee. Yes, you'd have to pay private mortgage insurance, PMI, but there's a difference. PMI automatically drops off once your loan reaches 78% loan to value. That means you're not stuck paying mortgage insurance for the life of the loan like you would with an FHA loan. Before taking an FHA loan, I highly recommend researching local banks and credit unions, and you might find a conventional loan with better terms that could save you thousands. And here's something that most real estate investors don't even realize. Your local bank or credit union could be the key to financing your next investment property as well. I actually make a full breakdown on why local banks and credit unions are crucial when investing in multifamily real estate. And if you want to know how to use this to your advantage and get the best financing possible, make sure you check out that episode. The link is in the description. So I hope you enjoyed. Please remember to rate, review, subscribe. Send me comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at Syndication Superstars. That is Syndication Superstars. Look forward to 2 more episodes next week. See you then.
If you always want to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.